Welcome, everyone, to our roundtable event today focused on reducing health insurance costs and improving coverage for employer-sponsored plans. Today, we are going to explore how individual coverage health reimbursement arrangements, or ICHRAs, provide smarter and more flexible health benefit options for employers and employees alike. I'm Kyle Sloan, President and Chief Operating Officer of Newtek Insurance Agency. And today we are joined by Barry Sloan, President, Chairman, and CEO of Newtek One, my colleague Leslie Slay, Vice President of Employee Benefits here at Newtek, and Zach Egan, our Head Account Executive at Thatch, our ICHRA platform partner. So we are excited to walk you through how ICHRAs are transforming employer-sponsored health benefit plans today. A little housekeeping before we get started. All attendees will be muted. Please use the question and answer icon to submit questions. We'll be monitoring questions and answering some live and others directly after the call today. We're aiming for the session to run approximately 30 minutes, and our goal is to raise awareness and start the conversation, not give legal or tax advice or full implementation plan. For a customized review, we'll be happy to follow up and set that up with you afterwards. Before we get started, I'd like to introduce Barry for a few opening remarks. So Barry, I'll hand it over to you.
Thank you, Kyle, and welcome everyone. I appreciate the opportunity to work with the insurance agency and present the opportunities that are in front of us for health insurance and helping employers and employees navigate a very interesting marketplace. Little background on Newtek One. We were established in 1998, been a publicly traded company since 2000. So we've been public for 25 years, established 27 years. Company basically has in its DNA to provide business and financial solutions for independent business owners all across the United States, a very, very large demographic. The insurance market today, it's tricky. There are very few people that are coming up with the golden ticket saying, gee, I had my premium go down and my coverage went up. It's a very, very tough area. So with that, we are here to work with all of you on a consultative basis. We're very, very knowledgeable about ICHRA and the health insurance regs. We're licensed to do business in all 50 states. We service over 80,000 clients in our book of business. We have over $2 billion worth of assets in our company. And we really look forward to this presentation today. We think it could be immeasurably helpful. We look forward to you working with Newtek One. Kyle, please take it away.
Thank you, Barry. So let's get started. So Leslie, let's start by setting the stage. And how would you describe the current state of the health insurance market for employers today?
Well, thanks for the easy question first, Kyle. Super appreciate that. And definitely thank everybody for listening in today. I think this is going to be a really interesting conversation as we go through this. Healthcare costs today now consume about 20% of GDP. So it is certainly an expensive item. We've seen healthcare costs grow from $100 billion or so in spending from 1970 to now today we're topping $4 trillion of expense. And employers are shouldering more of that cost than ever before. And the reason that that's the case is that I'm not sure if our audience knows this, but about 47% of all Americans that have health insurance get that health insurance through employer-sponsored health plans. So we have other markets where people receive coverage, and we'll talk a little bit about how it's all integrated and how that all works. But obviously, the brunt of that is with businesses in this country offering those benefits for their employees.
So Leslie, why do we see group rates continue to climb at these rates? And tell us about the impact on the independent business owner.
Sure. Well, this slide, says a lot. In the last 7 years, we've seen rates go up, 38%. We have this thing called trend, which is a fancy word for inflation, healthcare trend. This year, 25-26, it's predicted to be about 8 to 10%, and that gets compounded year over year. There's a lot of reasons why health insurance rates continue to climb. I do want to remind everybody before I get into some of the details details as to what goes into the secret sauce, right? Why are they so expensive? Remember that in the United States, healthcare is a for-profit business, all right, which is not regulated in any way, shape, or form. So that could be a separate conversation we have on another day around, transparency and what goes into healthcare spending. But when we help, for example, clients and their employees are looking at a hospital bill, and we're helping them go through that, and we see that a Tylenol is $72 for one tablet, and no one is saying, well, wait a minute, that's not right. We shouldn't be paying that, right? We can only begin to understand why health insurance premiums need to be where they're at. Now, besides the unregulated healthcare marketplace in terms of costs or transparency of costs, we also have, some really great things that are happening in the healthcare space. We have improved technology. Kyle, I never thought that in my lifetime I might see cancer cured, but we're literally on the cusp of that. Thanks to a lot of things, genetic testing, for example, where we can down to the genome understand which cancer drugs will be the most effective to treat certain types of cancer. I mean, this stuff blows my mind, but along with that comes expense, comes research and development. So we have improved technology, we have increased costs in terms of research and development. We certainly have specialty medications. There's a lot more of those specialty drugs out there that cost a lot of money to prescribe and to get to market. We have trend, just normal inflation. So, with our system in the United States being a for-profit system, and with all of these other stressors, and I'm not even mentioning the tariffs yet, because we don't know what impact that will have on our rates moving into 25, 26. I unfortunately, I get the opportunity to not paint the pretty picture, right? I get the kind of depressing news that it's not going to get better. We're going to continue to see these pressures on insurance premiums throughout the next several years. And again, our employer groups, our clients are dealing with bearing the brunt of this because their employees seek coverage, through them.
So while we see these exponential rate increases on the group side, we're seeing that the individual market remains a lot more stable. So how do we view that more stable market as an opportunity for employers?
Well, I'm sort of an insurance nerd, so I've been doing this a long time, and I pride myself on being a nerd in some things. So I don't want to make this a big underwriting discussion, but although my actuary friends would love me if I did, but I do maybe want to give a little insurance 101 here. Just take a few minutes to sort of explain why the individual market we've seen more stable than the group market. So in the United States, we basically have three different markets, mostly three. I would say there is a fourth one, but that's the uninsured. So I'm going to park that over there. We have three markets where people can and do seek insurance coverage through. We have the Medicare market, right? We've got 68 million folks or so covered through Medicare, right? And then we have the individual marketplace. That's the marketplace where you can go, whether it's through healthcare.gov or through some of the states, like California has their own marketplace, Covered California, where you can go and purchase individual health insurance for yourself as a consumer and your family, choose amongst many plans, right? You own those policies. You're not obtaining them through an employer, right? As long as you pay the premium, you're enrolled, all that good stuff. So we do have a lot of people going to the individual market, and that right now has about 24-ish million. I like to use the word ish because depending upon what website you go to, the numbers do change a little bit, but that's a relatively good number, and it's growing. We've seen good growth over the last several years in the individual market. And then we have the market that businesses have received their insurance through. In our industry, in the we call it the commercial group insurance market. So the reason that we have not seen as much stability there, from my perspective, as we have in the other markets, is that the law of large numbers don't apply in the same way. Even though we have more people covered through the group commercial markets across the country with the various carriers, those books of businesses are segmented. So let's, for example, take an insurance carrier. Well, we won't use any names, so we'll just say insurance carrier A. They offer coverage to small businesses. That would be your 2 to 50 or 100, depends on the state, size customer. Then they'll also offer coverage to businesses that are larger than that, middle market, that 100 to maybe 1,000 or so employees. And then you have your large group pools and books of business. Inside all of that, you then have fully insured, and then you have self-funded. So think about a pie, and all of a sudden you're cutting it into these slices, and now you're making the slices smaller and smaller and smaller. Well, they're looking at their books of business and the slices, right, the pieces of pie, and they're giving rate increases on those segments within their book. So rather than applying the law of large numbers across the entire book, they're actually now slicing and dicing it up. So you don't get the benefit of less volatility. You get actually less stability, more volatility. That's the sign for volatility. That's the technical side. As unlike the individual marketplace, where it is spread more evenly across the 24 million or so folks, right? The other thing that I will mention, because I think it's important, in the individual marketplace, we also have, due to the Affordable Care Act and some laws that were passed within the states at the time that legislation came into existence, the states have some control over what a carrier can and cannot do in terms of increasing the individual health insurance rates in that state. So if carrier B comes to the Department of Insurance in New York and says, I want to increase my individual rates 30% next year, the Department of Insurance and the individual insurance commissioner will look at that along with all of their data and say, no, you can't. You can increase your rates X. You can't increase it 30%. So we have a meter on the individual marketplace that we also don't have in a lot of our commercial group insurance business. Now I'm going to breathe. That was a lot of information and a little bit of underwriting, but I hope that painted a picture as to why we see a little more stability and potentially a lot more future stability in the individual marketplace than we will ever see in the group or commercial group marketplace.
No, absolutely. And we continuously spend more money on health insurance as business owners, as consumers, and the satisfaction level for our services is historically low. So from your perspective and where you sit, what do you see as driving this level of dissatisfaction amongst both group consumers and individual consumers?
For one of the most expensive things in this country that we buy, it's certainly one of the most hated. And maybe it's just the word insurance. I see my colleague Zach at Thatch smiling a little bit. It's I don't know about y'all, but if I'm gonna buy a new car, right? That's a high ticket item. I want to love it. For those of you that know me personally, if it's a great new pair of shoes or a handbag, I want to love it. Okay. Insurance, I don't think anybody says to me, hey, I just got off the phone with my insurance carrier. I had the most wonderful experience. So not only from a cost perspective, just the whole industry that supports obtaining health care in the United States is it's challenging at best, right? It's complicated. The networks are getting more narrow. More and more things are being excluded from coverage. It's also even with it being more expensive, I want to say it's less affordable. And what I mean by that is that a lot of employers, in order to continue to offer benefits, they're having to buy down. They're having to increase deductibles. They're having to increase copays. They're having to limit coverage in order to even keep insurance around to be able to continue to offer it. So, but yet the cost is still going up. So usually employees have some sort of cost share, typically. Maybe not for themselves as employees as much, but definitely for dependent coverage, right? We're bearing the brunt of that. That comes out in terms of a payroll deduction. So not only are employees or people being asked to spend more out of their paycheck, their deductibles and out-of-pockets are going up. So when they get to the doctor's office or they have that chronic illness that they're needing to treat, or God forbid they're in an accident in the hospital for 30 days, they can't even afford the deductibles. And so, I mean, people are going into serious debt with healthcare, even though they have insurance. I mean, we have this conversation of one of my favorite clients, although they're all my favorite clients, but we have this conversation every year at renewal time, which is his frustration around him and his people paying more and more and more and getting less and less and less. And then, it's just this bad cycle of events there. So
if we all feel the same pain in the market, right? From the consumer side, the group benefit side, we're shopping for options and we know that we come up short. What would you say would be if an employer is looking for a more balanced approach and a more sustainable approach, what do you think that they should be considering?
Sure. Well, we try to be, the good stewards of the different, right? Not only the traditional methods of insurance, but we're also introducing a lot of different concepts to our clients depending upon suitability and fit and what objectives they're trying to meet. I want to say what's old is new again, and that sort of works a little bit, especially in the employee benefits health insurance industry. We have a situation now where we've had this concept called defined contribution that's existed for as long as I've been in the business, which is a long time. For those of you that maybe have been in the business a long time or have heard of something called a cafeteria plan, back in the day, a long time ago, that's what these were really called. And really what we saw cafeteria plans are really nothing more than defined contribution. It was the idea that you give an employee or you give an employee an amount of money, a stipend, an allowance, so to speak. And they take that allowance and they go into their systems, their enrollment portals, and they choose plans and benefits that were best for them using this pre-allocated dollar amount. Usually you could only offer that type of plan if you were a really large organization back in the day because there's a lot of technology, right? So fast forward now to 2025, we wanted to do more of a defined contribution approach back when the Affordable Care Act was first passed. But when it was passed, the IRS came in and said, no, you can't do this the way you guys are talking about doing this. We won't allow you just to give your employees an allowance and have them go spend it in the marketplace per se. And certainly we won't treat it as a tax advantaged employer deduction like traditional health insurance contributions are treated now in the employer market, right? If you're a business and you contribute towards the cost of health insurance, you can use that. That's a deductible expense. So the benefit of that went away. In 2019, an executive order was signed, which allowed us to do exactly what we wanted to do in 2010. So yay for that. The challenge was, so now we're back with defined contribution. It's allowable. We can do that. But we didn't have the technology to really support the employee experience and the employer experience in making this realistic and making this happen. So now we're sitting here in 2025 with a partner like that, with everything now coming into play, an opportunity for employers to define their own budget. not have it tied to insurance carrier increases, because previously to this, an employer's contribution or the amount they contributed towards healthcare was a function of the rate. Right? So if your insurance rates go up 10% and you've got some rules you have to play by in terms of what your contribution has to be as an employer, then by nature your cost has to go up as an employer. Not today, not any longer. Now we can, barring some Affordable Care Act guidelines still, if you're an applicable large employer, which we'll talk about because Zach knows it's not a get out of jail free. I'm just going to give my employees $20 and we're going to call it a day and we're good to go. That's not necessarily going to work in all situations. But now we have the opportunity to have employers determine their own budgets, and not only determine the budget, but give their employees a lot more choice, a lot more flexibility in their doctor networks, the opportunity to purchase what we call point solutions, which allow employees to customize their healthcare experience so they can get more mental health, or they can get additional disease management or infertility. I mean, there's a whole plethora of things we can do. It's scalable. So as an employer grows or has to cut back, we can do that and move those levers with the plan. And I think that more employers, our industry experts are anticipating that within the next 5 years, of the 170 million or so folks that are covered through employer-sponsored plans, almost 50% of those now will be using ICHRA as a way to move forward and purchase health insurance through their organization. So that's why we're excited to talk about this. We didn't have as an option before, we do now, and I think it's something that every company should look at least be aware of. And I know we're going to be talking a lot about it over the next several months.
And this is a great time to bring Zach in. So for those that are new to ICHRA, give us a simple overview of what it is, and from Thatcher's perspective, why it's gaining so much more traction in the marketplace today.
Yeah, for sure. And I think it's always important to start with, why does anyone even look to an ICHRA? What are we accomplishing by moving to an ICHRA? And so there's really two main reasons that any of our clients come to us and say, hey, we want to explore this. And one is we want to save money. And two is we want to offer great benefits to our team. So through ICHRA, this allows, much like Leslie was saying, this allows you as the employer to define your budget, right? This is how much we're going to spend on healthcare this year. And then we're going to take that budget and we're going to allocate it to each individual employee. So they all have their own personal budget that they can use to design the benefits package of their dreams. So instead of saying, hey, Zach, open enrollment's here, you can pick between these 3 plans. We won't name carriers, but you can choose, plan A, B, or C, right? And Zach will typically say, I'll click this one for whatever reason, or hey, I've heard about PPOs, those are great, I'll click that one. Now the individual employee has a wide variety of plans available to them. This could be 20 plans, it could be 50 plans, it could be 100 if you're in states like Florida and Texas. So now the employee can take that budget and say, what makes the most sense for me and my family? Do I need this PPO plan? Do I want this HMO plan with this carrier that I love? And so it's a way that they can really be efficient with those healthcare dollars. And then beyond that, Leslie started to mention point solutions, right? Maybe someone wants to actually put some dollars towards mental health support or therapy sessions or fertility, whatever it is. You can use these dollars towards any other qualified medical expense, right? That could be prescriptions. I sprained my ankle the other day and I went to Walgreens and picked up crutches, all with those qualified medical expense dollars. So think of it as a way overall for employers to offer a holistic benefits package without having to do the work that goes into designing that or the cost that goes into over-insuring folks by bringing in all these point solutions. So TLDR there, cliff notes of what we're achieving here.
So Zach, how would you say the defined contribution model and class-based budgeting is helping employers manage the costs as well as scale benefits?
Yeah, I think on the first piece around managing cost, in Leslie's talking about these year-over-year increases. I have clients that come to us and say, hey, Zach, we just got hit with a 40% increase because of these high claims year-over-year. For not even just a small business, any business, this becomes unsustainable. And your options are, do we aggressively slash benefits? Do we look to other portions of the business where we can cut costs. And because the rates are regulated and set by the IRS for the calendar year, the costs are very controlled and predictable. You're not going to come back next year on your ICHRA plans and have this surprise 30% increase, because no one is looking at the overall health of your population. That's not a factor when it comes to the cost of these plans, because those risks are spread out across those 25 million Americans on individual plans. So defining your budget within that is one thing, and then the employees being able to say, hey, what makes the most sense for me and my family is really the benefit of what we're talking about here. And then the class-based budgeting as well, Kyle. This is an option. We have a lot of large employers that say, hey, we really want to take care of our full-time employees, offer this really healthy allowance, but we also want to do something for our part-time employees. We want to give them some kind of benefit. There are, without scaring anyone, because this is where Thatch comes in, there are nearly infinite ways you can deploy a allowance structure to really, as the employer, be able to design that benefits package that is in line with what you're trying to achieve as a business. Is it to attract and retain talent, keep employees happy, lower cost? There's a lot of different ways we can slice this to meet, the ever-changing landscape of the space.
So bringing it back to Leslie for a minute, because I know we are coming up on time. What are some of the top reasons that you found from some of the groups that we've been speaking with as we're going into planning for 2026 that we're finding making the shift to ICHRA?
Well, I mean, I think we've talked about it almost on every single second of this conversation, which is cost. I think employers they're exhausted. They're tired of the game around, getting the renewal at the 11th hour, trying to figure out plans that work for everybody. Trying to communicate all that, and then people just aren't happy. So to upend that and to kind of reinvent how that gets played out, I think is refreshing. I think some employers are like, well, this sounds a little too good to be true. So I do want to put it out there. We're still here. We are still hand-holding our customers all the way through this. Thatch is here as our ICHRA partner to do that as well. It is not as scary as one might think. There's we like a little artificial intelligence. Like, there's a lot of great tools and resources now built into these models to really help people move this along. So definitely cost. And then I would say the next reason that they want to do it is employers can't offer 10 different carriers and 30 different plans. They can't begin to offer that choice. Now they can.
I think we have some questions that are coming in from some of our attendees, and this one must be coming in from somebody from the HR team. So, Zach, I'll task this one to you. Tell us a little bit about what the implementation and the support looks like for an ICHRA for both the employer perspective and the employee perspective.
Yeah. And I think even it might be important to start with let's say you did this on your own, what happened before the technology existed, to kind of make this more tangible. But ultimately, what would happen is if you went with an ICHRA prior to like a Thatch existing, you would be manually, as the HR team in this case, assigning dollar amounts to each person. That person would take it and go to healthcare.gov or Covered California, and they'd be kind of on their own to figure out what plan makes the most sense for me. They would then pay for that plan on their individual card, and then they'd come back to you as the HR team and say, hey, I need a reimbursement. Administrative nightmare at scale. So in terms of the implementation of this, the ongoing support, what it looks like, the technology has evolved so much, and what we've built here at Thatch is the ability to automate all of those processes we just discussed, from administering, the budgets for each person, seeing what plans are available, even automating enrollments with the carrier's deductions, things like that. There's going to be a lot of administrative headache that is lifted. And then from an ongoing support standpoint, the people element is so important. Like Leslie was saying, we are here. Our clients have an implementation team, customer success managers, and expert advisors, because we know the employee is going to say, hey, we're looking at 30 different plans. How do I make a decision? They can book time or schedule time with our team, who can actually help them pick a plan and understand their exact needs live on a call together. So combination of people and tech to make that simple.
Wonderful. And Leslie, real quick from the cost perspective, what would you say the ROI is on being able to switch to a plan like this?
Well, in terms of that is an individual number, so I can't give a blanket statement because I know that's going to come back and haunt us. But we have seen examples thus far of companies where we're only looking at minimum contribution amounts because they're over 50 employees, surpassing actually being able to buy a much richer benefit plan that's currently being offered and saving not only employees money out of their pocket, 10, 20, 30% on what their current contribution structure is, but organizations saving equal or more on the premiums that go out the door to the insurance carriers. And remember, those allowances are only given if the employee enrolls. And so we're seeing this to be just a very cost-effective way to look at this moving forward.
Perfect. Well, we're coming up on time, so I just want to thank everybody for joining us today, and we appreciate the time you took from your busy schedule to participate. For more information or to schedule a personalized consultation, feel free to reach out to Leslie directly, lslay@newtek1.com or 646-889-7007. So we look forward to helping you explore how ICHRAs are going to be able to benefit your business. Take care.
Thanks, everybody.